Picture this. You're standing on the precipice of the 21st century's most audacious financial experiment. Imagine placing not just a few $1,000s, but millions, yes, millions of hard-earned legacy-building capital into a fledgling startup barely scraping together any revenue, all for the purpose of stockpiling some of the world's most unpredictable and volatile digital assets. It sounds almost reckless, perhaps even foolhardy. Yet this is exactly what some of the wealthiest and most influential families, including the Trumps, are doing. Why are these power players suddenly pivoting so aggressively towards Bitcoin and other cryptocurrencies? What do they sense on the horizon that much of Wall Street still fails to grasp, or is too cautious to admit? Let's rewind just a handful of years. Back then, the Trump family was widely known for their skepticism toward cryptocurrencies. Former President Donald Trump himself once dismissed Bitcoin as little more than a scam against the dollar. Yet fast forward to today, and the landscape has changed dramatically. Donald Trump Jr. has made headlines with a $4 million investment into Thumzup Media Corporation, a modest startup headquartered in Los Angeles. This is not your typical Silicon Valley unicorn. Thumzup is a young company attempting to revolutionize advertising by empowering everyday people, regular social media users, to promote brands on platforms like Instagram, earning micropayments along the way. But here's the kicker. Thumzup's financial performance so far is, by any traditional measure, underwhelming. In the first quarter of the year 2025, the company reported a mere $151 in revenue. That's right, barely enough to buy a new smartphone. Meanwhile, its losses soared past $2 million during the same period. For most investors, this would be a glaring red flag, a signal to run for the hills, clutching their wallets. Yet, for the Trump family and a growing number of avant-garde financiers, these numbers are not a deterrent. Instead, they're a sign of disruptive potential. So what's really happening here? Thumzup is not playing the usual startup game of chasing early profits or blitzscaling user growth at any cost. Instead, it has become a poster child for a radical new strategy that's sending ripples through corporate boardrooms. The idea of holding up to 90% of its liquid assets in Bitcoin and a carefully selected basket of other cryptocurrencies. This is not just a hedge against inflation or currency devaluation, but a calculated bet on the future of digital money itself. This move, while bold, is not entirely without precedent. Think back to the early 2020s, when MicroStrategy, a business intelligence firm led by the outspoken Michael Saylor, stunned the financial world by converting its corporate treasury into a veritable Bitcoin fortress. Saylor's company bought billions of dollars worth of Bitcoin, arguing that the traditional fiat system was too unstable and prone to inflationary decay. MicroStrategy's gamble paid off handsomely during Bitcoin's bull runs, inspiring a wave of imitators. Yet Thumzup is arguably pushing the envelope even further. After raising $6 million in a Series C preferred stock offering during the summer of 2025, Thumzup's board didn't just double down on Bitcoin. They voted to diversify their crypto reserves, adding Ethereum, Solana, Dogecoin, Litecoin, Ripple, and stablecoins like USD Coin to their balance sheet. By July of that year, Thumzup's crypto treasury included just over 19 Bitcoin, each coin valued at more than $100,000 at the time, resulting in a total stash worth over $2 million. But the company didn't stop there. Leadership sees this portfolio not merely as a hedge, but as a strategic asset. By integrating these digital currencies into its core business, Thumzup is opening the door for advertisers to pay in crypto, aligning itself with the rising tide of digital assets. With a social media reach that now touches more than 535 million users worldwide, yes, over 500 million people, the company is positioning itself at a unique intersection, the crossroads of digital advertising and the emergent world of decentralized finance. Why, then, are individuals like Donald Trump Jr. and his brother Eric so eager to back this high-stakes, high-reward approach? The answer lies in a mixture of financial opportunity and strategic vision. Eric Trump, for instance, has recently joined the board of MetaPlanet, a Japanese company that pivoted from hospitality to become one of Asia's most prominent corporate holders of Bitcoin. Both brothers are also closely involved with Dominari Securities, the investment firm that led Thumzup's latest funding round, and which itself has begun investing in Bitcoin exchange-traded funds. Meanwhile, Truth Social, the social media platform operated by Trump Media and Technology Group, has secured over $2 billion in funding, with much of that capital reportedly earmarked for Bitcoin and blockchain-related ventures. This marks a profound change in the Trump family's public stance on digital assets. Where once they spoke with skepticism, now they speak of making the United States the crypto capital of the world. For the Trumps, Embracing crypto is about much more than financial speculation. It's a calculated effort to connect with the millions of Americans, especially younger generations, who see digital assets as the future of money, investment, and even political influence. But beneath the headlines and bold pronouncements, this strategy is not without serious pitfalls. Let's break down the looming dangers. First, there's the infamous volatility of Bitcoin and its crypto cousins. The price of Bitcoin has been known to swing by double-digit percentages in a single day. A sharp drop could slash Thumzup's balance sheet by millions overnight, rendering its financial position precarious. For a company with barely any ongoing revenue, such swings are more than just accounting headaches. They're existential threats. Second, the regulatory landscape remains a minefield. Around the globe, governments are still wrestling with how to classify and control cryptocurrencies. In the United States, the Securities and Exchange Commission, the Commodity Futures Trading Commission, and other agencies have at times offered conflicting guidance. A sudden regulatory crackdown, such as a ban on corporate crypto holdings or severe restrictions on crypto payments, could force Thumzup and others like it into a desperate scramble to comply, potentially at great cost. Third, the accounting rules for digital assets are notoriously complex and ever-changing. Unlike traditional assets, cryptocurrencies are treated as intangible assets under current U.S. accounting standards. This means companies must record impairment losses whenever the market value drops, but cannot recognize gains until they sell. Navigating this labyrinth of rules can be a nightmare for auditors, investors, and executives alike. Even the best-prepared companies can find themselves tripped up by new pronouncements or shifting regulatory winds. Fourth, let's not overlook the ever-present danger of cybercrime. Digital assets are, by their very nature, prime targets for hackers. The crypto world has seen billions of dollars lost to theft, phishing attacks, and sophisticated breaches. A single vulnerability in Thumzup's systems could result in the loss of its entire digital treasury, plunging the company into crisis. Robust cybersecurity protocols, cold storage wallets, and constant vigilance are not optional. They are absolute necessities in this new financial frontier. The debate among investment heavyweights is fierce. Cathie Wood, founder of ARK Invest and a vocal proponent of disruptive innovation, describes Bitcoin as an insurance policy against monetary and fiscal irresponsibility. She points out that in an age of rampant money printing and ballooning government debt, Bitcoin's built-in scarcity and decentralized nature make it a compelling alternative to fiat currencies and even gold. Michael Saylor, whose company pioneered the Bitcoin treasury approach, is even more poetic, calling Bitcoin a swarm of cyber hornets serving the goddess of wisdom, exponentially growing ever smarter. Yet, not everyone is so optimistic. Critics argue that betting a company's future on an asset that can lose half its value in a matter of weeks is reckless at best, disastrous at worst. Value investors like Warren Buffett have repeatedly warned that cryptocurrencies have no intrinsic value, and that the risks far outweigh the potential rewards. Some financial analysts liken the current era to the dot-com bubble of the late 1990s, where wild speculation fueled sky-high valuations, only to end in tears for many. So is Thumzup blazing a trail that others will inevitably follow? Or is it careening toward financial disaster? And what do the Trump brothers and their circle of advisors see in this strategy that keeps much of corporate America on the sidelines? The answers to these questions could reshape not only how companies treat digital assets, but potentially how entire nations approach the future of money. To fully grasp the implications, let's look ahead. What could Thumzup's wild crypto pivot mean for the future, and what consequences, both positive and negative, might unfold for the company and its high-profile backers? First, consider the opportunity. If Bitcoin and the broader crypto market continue their upward trajectory, Thumzup could see its balance sheet balloon dramatically. Those early millions invested in digital assets could multiply, giving the company a financial war chest that dwarfs anything traditional ad tech firms might imagine. As Raoul Pal, founder of Real Vision and a noted macro investor, has stated, the cryptocurrency market is still in its early innings, offering tremendous upside potential for companies that embrace it. Should Bitcoin become more widely adopted as a corporate reserve asset, Thumzup might not just survive these risky years. It could become a case study for business schools, cited alongside MicroStrategy as a pioneer of 21st-century corporate finance. Moreover, Thumzup's willingness to accept crypto payments from advertisers could make it a magnet for digitally savvy brands and influencers, especially as blockchain technology becomes more integrated with social media and e-commerce. Imagine a world where a multinational cosmetics brand pays influencers in Ethereum, or where a viral campaign on Instagram settles instantly in stablecoins, bypassing banks and payment processors entirely. Thumzup's infrastructure is designed to adapt to this future, potentially transforming the way advertising budgets flow through the global economy. However, the risks are equally glaring. By tying its financial fate so tightly to some of the world's most volatile assets, Thumzup is betting the company on forces beyond its control. A single bad week in the crypto markets could wipe out more value than a year's worth of sales. Regulatory crackdowns, especially in the United States or Europe, could freeze or even ban corporate crypto holdings, forcing Thumzup into a desperate scramble to unwind its positions. And as history shows, the crypto world is littered with the remains of firms brought down by hacks, scams, or simple mismanagement. Without world-class cybersecurity and relentless risk management, Thumzup's digital gold could turn to dust overnight. There's also a practical challenge looming: accounting. As the rules for valuing and reporting digital assets evolve, Thumzup's books could become a labyrinth for investors and auditors alike. Lynn Alden, a respected investment strategist, notes that Bitcoin's long-term value proposition remains intact, driven by its scarcity and decentralized nature. But only if companies can successfully navigate the turbulence of shifting regulations and standards. The company's journey, therefore, will test both its financial acumen and its operational discipline. Beyond the balance sheet, there are wider implications for the global financial system. If Thumzup's strategy succeeds, it could trigger a cascade of imitators. Other startups, mid-sized companies, and even legacy corporations looking to boost their returns and hedge against inflation. This could accelerate the mainstream adoption of cryptocurrencies, forcing regulators, banks, and policymakers to adapt at a pace few are prepared for. On the flip side, a spectacular failure could serve as a cautionary tale, reinforcing skepticism and catalyzing tighter regulations that slow the pace of innovation. For individual investors, entrepreneurs, and curious observers, Thumzup's story is a live experiment, a front-row seat to the future of corporate finance. If you're a chief financial officer contemplating how to manage your company's reserves, or a retail investor wondering whether to allocate a portion of your portfolio to digital assets, this is an invaluable case study in real time. You're witnessing, in vivid detail, the collision of bold risk-taking and cautious tradition, of new technology meeting old-school skepticism. As Michael Saylor famously remarked, Bitcoin is a swarm of cyber hornets serving the goddess of wisdom. If Thumzup's bet pays off, it could inspire a new generation of startups to leap into crypto, fundamentally changing how companies manage their treasuries for decades to come. But, and this is crucial, the lesson here is not to blindly follow the latest trend or chase headlines. The crypto world rewards the prepared, not the reckless. Solid cybersecurity, a deep understanding of regulatory requirements, and a robust risk management strategy are non-negotiable. Investors must look beyond the hype, scrutinizing revenue models, long-term sustainability, and the underlying business fundamentals. As Kevin O'Leary of Shark Tank fame has said, "I'm allocating 5% of my portfolio to Bitcoin because I want to be where the growth is." But only as part of a balanced, carefully considered approach. In the end, is Thumzup's crypto treasury play a stroke of genius or a ticking time bomb? The truth is, it's both. If the stars align and the crypto market matures, Thumzup could go down in history as a visionary, a company that saw the future before anyone else. But if volatility or regulatory crackdowns turn against them, the fallout could be severe. The Trump family's dramatic pivot to digital assets will either be remembered as a masterstroke of financial innovation or as a cautionary tale for generations to come. As a little-known but telling fact, by June 30th, 2025, Thumzup had quietly secured a coveted position on the Russell Microcap Index. This achievement could attract serious attention from institutional investors, potentially bringing in more imitators and accelerating the trend toward corporate crypto treasuries. The company's insider control now sits at over 68%, an indication of strong alignment between management and shareholders, at least for now. At the same time, the broader context cannot be ignored. Corporate Bitcoin treasuries are at a crossroads. Three potential scenarios loom on the horizon. First, the widespread adoption of Bitcoin and other digital assets as mainstream components of corporate finance. Second, increased regulatory scrutiny leading to restrictions or outright bans on corporate crypto holdings. And third, the emergence of new financial instruments and services tailored specifically to companies managing large digital treasuries. The path Thumzup chooses, and its ultimate success or failure, will serve as a crucial case study for the next wave of corporate innovators. So what does all this mean for you? Whether you're an aspiring entrepreneur, a seasoned investor, or simply a curious observer fascinated by the intersection of money and technology, Thumzup's journey is a mirror reflecting the hopes and fears of an entire generation. We stand at the dawn of a new era, where the lines between traditional finance and digital innovation blur, and where the rewards and risks have never been greater. Now, I want to hear from you. Is this the beginning of a new corporate world? Or a disaster waiting to happen? Are we witnessing the birth of a new paradigm? Or just another speculative bubble set to burst? Share your thoughts in the comments below. Make sure to subscribe for more deep dives into the fascinating world where economics meets technology. And stay tuned